How's it going, everyone? Cameron Lombardi back here with another stock market investing video. Today, we're going to be doing a portfolio reveal. So I'm going to show you guys all of the positions that I have in stocks, options, and talk about different strategies that I use to give myself access to more money than I actually have cash in my portfolio, and to show you how I use options to generate weekly and monthly passive income. I just want to say thank you to all the new subscribers from the last video. It really means a lot to me as I put out these new videos. You know, it's actually taking up interest. So let's get right into it, guys. I don't want to waste too much time. So first, let's scroll down to my stock positions here. So these are the stocks that I currently have. And as you can see, these first 6 or so, they're just fractional positions. And it's just because, one, I've had positions on these stocks where I've been selling covered calls and got assigned. So I had 100 shares at one point and they went away. Or two, I just like to have them as one of the first things that I see when I open my portfolio. The SPY is the S&P 500 ETF. It follows the S&P 500. So that to me is the market. So I like to see that as the first thing to see how the market's moving. And then Amazon, Google, Meta, Microsoft. Those are all, in my opinion, leaders in the tech sector, so I like to see how that's moving. So these are all just stocks that I trade actively, and also ones that I like to see as soon as I open my portfolio so I can kind of see what the market is doing. Now, if we scroll down from there, you can see I have almost 11 shares of Tesla. I've had Tesla now for a while. I've just been buying a little bit here and there. And in my last video, you saw me sell this put option that I have on Tesla, and I'll be doing another video on that this coming week because I'll be adjusting this position probably tomorrow or Tuesday. But as you can see, just on the shares that I have there, we're up $327 or about 16%. Next position I have here is Alibaba. Now, Alibaba has come down quite a bit within the last few years here. In October of 2020 is when it kind of peaked. It was over a $300 stock, and now it's down to $84. My average cost, I have about 14 shares at $131. So I'm definitely down on this position, but it's not one that I mind to hold at all. I think long term, it's going to recover. There's always good news coming out about the stock. They're always beating earnings. A lot of analysts have this stock at the upper 100s in a target price. So I'm just going to continue to hold Alibaba. I think it's a good long-term play. Next position we have here is just a few shares of Boeing. Again, this was just one that I kind of bought when it was down, 8.5 shares, average cost 163. So I'm up about 30% on those shares. Next position that we have here is Delta Airlines. So Delta Airlines is one that I've been buying over time. I averaged into it at 100 shares with an average cost of $35.39, up about 4.6% on those shares. And I'm actually selling covered calls on Delta Airlines. So you can see I have a 37.5 covered call for next week. And Delta Airlines stock went up after I sold that. So it shows a loss of $11 there. It's not actually me losing money. That simply just means that I could have sold that call for a little bit more money. And if we click on it here, you can see I have received an average credit of 28 cents per share, which is 100 shares. So $28 I received, and it expires this next Friday. So we'll look into that a little bit more as we get into my options positions as well. So that's Delta Airlines. Next stock we have is Bank of America. Now, Bank of America has been down ever since this banking crisis at the beginning of March here. You can see over the last 3 months, it fell from about $34 down to about $26.97. And now we're somewhere in the middle there, about $28.68. So I'm a buyer of Bank of America. Warren Buffett is a big investor in Bank of America, and if he has a heavy holding in the stock, I'm definitely comfortable holding it. So you can see here I have 100 shares. I'm receiving a dividend of $22. My average cost is $28.08, so we're up about 2% on those shares. Again, I have a covered call on Bank of America here at $29 a share, and when I sold this last week, the stock went right up again. So it's not that I'm down $11 on this position. I just could have sold it for $11 more. I received a credit of $16 for that. And we'll take a look at this again as we go over my options positions. But I think Bank of America is a great long-term hold. I think that they'll definitely get back up to the $30 range, no problem. So I will continue to sell calls or sell puts on Bank of America and collect the dividends in the meantime. All right, going into the next position here, I also have 60 shares of KeyBank. KeyBank is a regional bank that I know is a really good company. I've been following them for a while. They've dropped down significantly as well at the beginning of March. They were like a $20, $19, $18 stock, and now they're down to 10, and they've dropped even lower than that at one point. So I just started averaging into KeyBank. I have 60 shares average cost of 11.31. So I'm down a little bit on those shares, and I'm also collecting the dividends on it. One interesting thing about KeyBank is it does have a pretty nice dividend right now. It's a 7.88% dividend. That's pretty hard to beat. So I'm probably going to end up averaging into 100 shares of KeyBank as well. And I will sell covered calls on it and collect the dividends as it comes back up, because I truly believe that this bank definitely will recover over time. Heading back into the portfolio now. Next position here. These next three positions I bought a couple years ago as the recovery from COVID was happening in the stock market. Everything was super hyped up, and transparently, I did have a loss on these three stocks. First one is ARKF, which is a fintech ETF. It's one of the ARK ETFs. And if we look here, it was really high back in 2021, up to $62 at one point. But I unfortunately have an average cost of $58.19. So I'm down pretty significantly on this investment. And I've honestly been holding these shares for a while now. I don't see it recovering to that point anytime soon. So I went ahead and started selling covered calls. I've been selling calls on it for the last few months. This month, I just so happened to sell a $19 call, and it is currently at $19.92. The call option expires on June 16th. So if it stays above that $19 strike price by the end of the day on June 16th, my shares will get called away. And honestly, I'm totally fine with that. I'm fine with taking a little bit of loss on this trade. I've been holding it for a while, and I'm just ready to reallocate the money and just take the loss. So that's totally fine with me. Next position we have here is PLTR. I'm sure a lot of you have heard of this. It's Palantir Technologies. It's a tech company. They're a big player in AI, which is just now starting to become more and more known in the stock market, and things are booming. And in the last month here, it's up over 90%, which is crazy. I mean, I was watching it around $7 or so, and I've been holding this since it was at $22 a share back in 2021 as well, around this time. And so I think it's a great long-term play. I'm not selling any calls on this stock. I have 149 and a half shares. I'm just going to keep holding this stock as it continues to hopefully rise up. And maybe once it gets past my average cost point or a little bit higher, maybe I will start selling some covered calls on it. But for now, I'm just going to hold it, and I think it's a great long-term play. And my last stock here is ACHR, which is Archer Aviation. It's an electric air taxi company. Again, this was another one that was kind of hyped up back in 2021. And I like the idea of it. I have 200 shares of the stock at an average cost of $9.21. So obviously I'm down quite a bit on this one, 68% as well. But it's another one that I'm going to be holding for a long term. Again, it's an electric air taxi company. We really haven't seen too much in the development of those yet, but they are progressing pretty quickly here. And just in case it ends up being another massively successful electric company, I'm going to hold on to this one. If our life one day looks like an episode of the Jetsons, then I'll be sitting pretty with these 200 shares of the company. It's just a speculative play that I have, and I don't mind holding the shares. Now, let's get into the main part of my portfolio here. So guys, what I like to do is I like to sell calls and I like to sell put options. So that's covered calls and cash secured puts. And by doing that, I generate myself passive income every week, every month, and I post videos regularly showing how I do that and individual stocks that I do that on. So last week I posted a video on Tesla. I sold a cash secured put on it, and we can click on this here. So I sold a cash secured put on Tesla on 5/31. I received an average credit of $1.20 per share times 100 shares. So I got paid $120. It expires this coming Friday on June 9th, and Tesla has gone up quite a bit since I sold it. So you can see the total return there's $104. I've already received that $120, so it's not like I'm making any more money on top of that. All that means is the contract is worth $16 now, so I can buy back this contract for $16 that I sold and exit out of the position, release my collateral, which is $18,000 since it's $180 a share times 100 shares. So that would release my collateral. I'd make the $104 and walk away. So what I will likely do, guys, is buy this position back probably on Monday, depending on what the market's doing. And then I'll look to sell another put on Tesla for the 16th, maybe a little bit higher, around 190 or so, and continue to just generate that passive income. All right, so let's get back to my options here. Another put option that I sold last week, same day on 5/31, was this put option on Google at a strike price of $118 per share. So my collateral here is $11,800, and I got paid an average credit of 75 cents per share, times 100 is $75 that I got paid to sell this cash secured put. So you can see Google went up after I sold this put as well. So it's going in my favor here. I could buy the option back at $13 right now and walk away with my $62. And again, sell another put option on Google another week out and continue to collect that passive income. So you're seeing the trend here. I like to sell puts to collect passive income. All right, so let's take a look at a few other positions that I have here. Bank of America, I talked about this one earlier. I'm selling a $29 call on it. My average price is $28.08 on Bank of America. So on top of the dividends that I receive from Bank of America, I also like to sell calls, and I'm receiving a little bit of extra premium. So here you can see I got paid an average credit of $16 to sell a covered call on Bank of America. Now that is by no means anything flashy or exciting, but it's just one that's going to generate you consistent profits over time, still a decent return per week. And if you average that out over the course of a month or a year, you're getting pretty good annualized returns, which is what we want to do. We're not looking for home runs with this strategy. We're not looking to turn $1 into $1,000 overnight. We're looking to build money over time in a safe, controlled way. All right, so let's get back again. So this is another one, Delta Airlines. I showed you guys earlier. So I received $28 for selling this covered call on Delta Airlines. Again, it expires this coming Friday. Delta Airlines, another one that's not super flashy or exciting or anything like that. You get $28 for selling a call for a week. But again, it's just consistent income over time. And if you can do that each week, each month, it will add up over time. And that's exactly what you want to do. Again, we're all about steady, consistent gains. We're not looking to swing big and get home runs because that involves a lot of risk, and we don't want to be seeing these huge swings in our portfolio. We want consistent upward trend over time. Now, I also wanted to show you guys this here. I did get exercise on a covered call that I had going on Amazon this past week. It expired this past Friday. And as you can see here, that top option there, Amazon $119 call assignment. I had 100 shares of Amazon and I sold a $119 call. And you can see that here. I got paid $107 to do that. My average price on Amazon was around $115 or so. So on top of the share appreciation from 115 to 119, I also got paid this $107. So, you know, I made a decent amount of money on that trade. But this is what happens when you do get assigned on a covered call. You'll see that assignment right there, and that $11,900 then goes back into my buying power. Now, the last couple positions here, guys, this is the covered call that I have on my ARKF shares. I got $57 for selling this covered call for the month. And as you saw when I went through the ARKF, it's well above that $19 strike price. So these will likely get called away if it does stay above that $19 per share strike, which is totally fine with me because, like I said, I'm ready to reallocate these funds into a different trade. Last but not least here, guys, I have a LEAP call option on Key Bank. As we saw, this was once a $20 stock and it dropped quite a bit. So I have a $13 call that I bought. So that means that if KeyBank goes back up to that price over time, I'll make a little bit of money as it comes up. It's basically like me controlling 100 shares of the company. So I'll just hold on to this. It doesn't expire until January of 2025. So it's just a long-term call option that I bought and I'll hold on to. It's not going to be a big home run or anything like that. Again, I think it was just kind of a safe play that over time will pay off. So that's my portfolio for the most part, guys. If we look at the last month, week, and year to date here, you can see by selling covered calls and selling cash secured puts, it does generate you some pretty good, decent income over time. We're in June right now, early June, and we're up 10.67%. So if I can continue at this rate over the year, a good 20 to 21% gain would be great. Now, something else I want to talk about is margin. I did make a video a couple weeks ago explaining how I use margin to leverage my portfolio and give me access to a little bit more buying power. So with all of those positions that I went through here, I still have $32,963 of buying power. And if we click on that, it's going to show you here my brokerage cash and my margin total, which is $25,000. It's going to take out my options collateral that I have on Tesla and Google selling puts. And then gives you my buying power here of $32,963.42. So I'll just touch on this again briefly. I like to use margin in a way that it doesn't actually charge me to use it. If we look at the margin settings on Robinhood here, you can see I have a borrowing limit of $25,000 set. Under this billing here with Robinhood Gold, I am a Robinhood Gold member. I pay $5 a month to get it, which is nothing. I mean, it gives you access to so many great things. So we can see the yearly interest rate there is 7.75%. So that's, if you're using margin, you're going to be charged that 7.75 rate on any margin that you're using. However, if you use it like I use it and you sell cash secured puts with that margin, you're not actually purchasing the stocks. So it doesn't count as actually using the margin and you're not getting charged that 7.75%. If you go back and look at some of these trades, I have $25,000 set as my limit. So I can sell puts on Tesla with margin way out of the money, collect $100 or $200 a week and not get charged anything from using margin. And that's just extra leverage that I have by using margin that I wouldn't be able to do otherwise. So by doing that, I'm able to earn extra money in my portfolio. And again, you just want to do safe plays with that over time. I can't stress enough that with selling covered calls and cash secured puts, you just want to do it on safe, reliable stocks like you see here for the most part: Google, Amazon, Bank of America. SPY would obviously be a great option as well. Apple, Microsoft, Tesla. These are all stocks that over time are going to be continuing to go up and that you'll be able to generate yourself some nice income in a safe manner over time. So if you guys like this video, if you like seeing my total portfolio here, be sure to leave a like on this video. It really does help the video and it helps the channel reach more people. Be sure to subscribe so you don't miss any updates. I'm going to be posting regularly on how I continue to do more cash secured puts and covered calls so you guys can follow along and see how the portfolio grows. And if you have any questions or any comments, be sure to leave them down below in the comment section. Thanks so much for watching, everyone, and I'll see you in the next one.